Tensions rise as the U.S. considers a significant offer to Iran, impacting oil prices and global markets. Additionally, the Federal Reserve's decision on interest rates looms large, while the stock market reacts to a busy earnings week. Here are today's top 10 stories you need to know. On April 29, 2026, major technology stocks faced a downturn as the S&P 500 and Nasdaq pulled back from record highs. This decline was attributed to a busy earnings week, where many companies reported their quarterly results. Notably, tech giants like Nvidia and Apple saw fluctuations in their stock prices as investors reacted to mixed earnings reports. The market had initially surged due to significant gains in the tech sector, but these results raised concerns about future growth. Analysts warn that the tech sector's performance is critical for sustaining the broader market. With the semiconductor industry accounting for a large portion of these gains, any negative sentiment could have widespread implications. Investors are advised to keep a close eye on tech earnings in the coming days. As the week progresses, market watchers will be analyzing further reports to gauge if the tech sector can rebound. Yesway, a convenience store chain based in Fort Worth, Texas, successfully raised $280 million in its initial public offering on April 29, 2026. This event marks a significant milestone for the company as it debuts on the Nasdaq under the ticker symbol YSWY. The funds raised are intended to accelerate Yesway's growth strategy, with plans to open approximately 130 new stores over the next 5 years. All eyes will be on its future performance and ability to deliver on expansion promises. On April 29, 2026, the Federal Reserve faces increasing scrutiny as it prepares to announce its decision on interest rates. With inflation concerns driven by ongoing geopolitical tensions, economists predict that the Fed will maintain rates in the 3.5 to 3.75% range for the foreseeable future. This comes after a recent poll indicated a shift in expectations, with many now doubting that cuts will occur before late 2026. The war-related inflation risks have led to a recalibration of economic forecasts, with analysts warning that elevated energy prices could persist. The Fed's approach to managing inflation while supporting economic growth is under the microscope. As the central bank navigates these challenges, its decisions will have far-reaching implications for both the U.S. economy and global markets. Investors are keenly awaiting the Fed's guidance in the coming days as they adjust their strategies based on its projections. As of April 29, 2026, oil prices have surged significantly following reports that the U.S. is considering an offer to Iran regarding its nuclear program. This potential diplomatic move could reshape the dynamics of the global oil market, particularly as tensions in the Middle East remain high. Historically, Iran has been a major oil producer, but sanctions have severely restricted its output since 2018. Analysts suggest that any easing of these sanctions could lead to a substantial increase in Iranian oil production, which would directly impact global supply and prices. The oil market has been highly volatile, reacting sharply to geopolitical developments, and this latest news has driven crude oil prices higher. The implications of this offer extend beyond oil markets, affecting energy-dependent economies and sectors worldwide. Market participants are closely monitoring the situation, with expectations that concrete developments could lead to further price fluctuations. In the coming weeks, stakeholders will be keenly observing the U.S. administration's next steps in its complex diplomatic relations with Iran. The stock market is reacting to a flurry of earnings reports released on April 29, 2026, as numerous companies unveil their quarterly performance. This week is crucial for investors, with a significant portion of the S&P 500 reporting results. Major firms such as Verizon and Coca-Cola are among those whose earnings will be closely scrutinized. Analysts have noted that the performance of these companies could either bolster market confidence or trigger further declines. The earnings season is particularly important as it provides insights into consumer spending trends and business profitability amid ongoing economic uncertainty. With inflationary pressures and fluctuating interest rates, the results from these companies will provide essential context on how they are navigating these challenges. Positive earnings could signal resilience and potentially attract more investment, while disappointing results might cause stock prices to plummet. As investors analyze these outcomes closely, the expectation is that they will adjust their strategies accordingly, shaping the market dynamics for the next quarter. On April 29, 2026, ongoing geopolitical tensions continue to significantly impact global markets, with traders reacting swiftly to the latest developments in international relations. The situation in the Middle East remains particularly volatile, fueled by escalating conflicts that have raised concerns among investors. This turmoil is not just a regional issue, it is influencing market sentiment and economic forecasts worldwide. Investors are increasingly worried about the potential ramifications of any escalation in conflict, which could disrupt vital trade routes and energy supplies, particularly oil. This unease has led to notable fluctuations in stock prices, especially in sectors sensitive to geopolitical risks, such as energy and defense. Economic analysts warn that prolonged tensions could hinder global recovery efforts from recent downturns and lead to increased inflationary pressures, further complicating economic stability. As market participants navigate these challenges, they are urged to consider the long-term implications of geopolitical developments on their investment strategies. In the coming days, critical updates regarding diplomatic efforts and potential conflict resolution will shape market dynamics. As of April 29, 2026, diplomatic discussions between the U.S. and Iran have taken a significant turn, with the U.S. considering a new offer from Iran. This offer, which includes proposals aimed at easing economic sanctions that have long crippled Iran's economy, is currently under review by U.S. officials. Historically, U.S.-Iran relations have been fraught with tension, particularly since the 2015 nuclear deal's collapse in 2018. Analysts suggest that if accepted, this could lead to an increase in Iranian oil exports, which would significantly influence the global oil market. The implications of this offer extend beyond economics, as it could also enhance geopolitical stability in the Middle East, a region often marred by conflict. Market reactions have already begun to surface, with oil prices showing volatility in anticipation of the outcome. Investors are particularly interested in how this potential thaw in relations might reshape energy dynamics. Should the talks advance positively, we could see a new chapter in U.S.-Iran relations, with far-reaching consequences for global energy security and economic forecasts. On April 29, 2026, economic forecasts are being reassessed as geopolitical tensions escalate, particularly in the Middle East. Recent developments, including military confrontations and diplomatic breakdowns, have raised alarm bells among economists and investors alike. The potential for sustained conflict threatens to disrupt global supply chains, which have only recently begun to stabilize following the pandemic. Analysts are adjusting their projections based on these emerging risks, with many warning of inflation spikes driven by surging commodity prices. Recent data indicates that energy prices are already on the rise, which is impacting consumer behavior and business operations across various sectors. As costs increase, consumers may reduce spending, further straining economic recovery efforts. Investors are advised to remain vigilant, as the economic landscape could shift rapidly in response to these geopolitical events. Additionally, central banks are closely monitoring the situation, as any significant changes may compel them to adjust monetary policies to mitigate inflationary pressures. As analysts provide updated forecasts, businesses and consumers alike must brace for potential disruptions, particularly in energy markets, which could reshape economic strategies in the months ahead. As of April 29, 2026, war-related inflation risks continue to haunt global economies, prompting urgent discussions among policymakers. Ongoing military conflicts, particularly in key energy-producing regions, have led to significant volatility in oil and gas prices. This instability has a cascading effect on consumer goods, driving inflation rates higher and straining household budgets. The Federal Reserve is particularly concerned about these developments, as rising energy costs contribute to overall inflation, complicating its monetary policy. A recent survey indicated that a majority of economists now anticipate that the Fed will maintain current interest rates through late 2026, a notable shift from earlier expectations of potential cuts. This decision reflects a careful balancing act, as the Fed seeks to manage inflation while fostering economic growth. Sustained inflation could profoundly impact consumer spending, eroding purchasing power and leading to cautious investment strategies among businesses. Furthermore, it could exacerbate income inequality, as lower-income households are disproportionately affected by rising prices. As the situation evolves, market participants are urged to stay informed about central bank decisions and the broader economic outlook. In the coming months, the Fed's policy responses will be critical in shaping the trajectory of inflation and economic stability. In a dramatic shift on April 29, 2026, the U.S. government is seriously considering a new diplomatic offer made by Iran. This development emerges amidst heightened tensions in the Middle East, particularly following recent confrontations between Iran and neighboring countries. The U.S. is weighing the potential benefits of easing sanctions against Iran, which could lead to a significant increase in oil production from the country, a key player in the global energy market. Analysts are closely monitoring this situation, as any agreement could stabilize oil prices that have been fluctuating due to geopolitical uncertainties and supply chain disruptions. The potential for Iranian oil to re-enter the global market could alleviate some of the inflationary pressures currently affecting economies worldwide, particularly in Europe and Asia, where energy costs have surged. However, the political complexities surrounding U.S.-Iran relations mean that any decision will not be straightforward, with domestic opposition likely to arise. As negotiations unfold, the international community is anticipating how this could reshape energy dynamics and influence global economic conditions in the coming months. The outcome of these discussions could be pivotal for both the U.S. and the broader world economy, setting the stage for a new era of energy cooperation or renewed conflict, depending on the decisions made in Washington and Tehran. Thank you for watching today's news roundup. Which story shocked you the most? Let us know in the comments, and don't forget to like and subscribe for more updates.